I'm Melissa Roberts from the Stevens Equity Research Group. My group researches the impact of non-fundamental events that may present both opportunities and risks for fundamental investors. Many people may not know that June is one of the most exciting months for stock liquidity and trading activity. Here's why. Since 2017, June has ranked as the second best month for share volume liquidity behind March, with an average 157 billion shares traded during the month. June is such a busy month because we have quarterly index rebalancings across major index families, as well as the annual reconstitution of the FTSE Russell U.S. index family. Any index reconstitution or rebalance is first and foremost a liquidity event. The trading on Russell's reconstitution or Recon Day is meaningful and continues to grow in size. On the 2024 Russell Recon Day, about 150 billion in net trading occurred directly due to the Recon. The 2024 Recon Day was the year's fourth best trading day in terms of shares traded, with 19.2 billion shares trading hands. Recon Day trading volume totaled 8.5% of all June volume traded, and that's up significantly from 6.9% in the prior Recon. The significance of major market rebalancing events is that they provide key liquidity and performance opportunities for investors. This is due to the significant amount of passive assets that track indexes, as well as actively managed assets that are benchmarked to the indexes. Nearly 11 trillion in benchmarked assets track the Russell indexes, with nearly 2 trillion invested in passive funds tracking the Russell U.S. index family. As a result, the June Recon of the FTSE Russell U.S. indexes is a highly anticipated technical event for both passive and active investors. People wonder why the annual Russell Recon results in a significant surge in trading volumes. Well, when indexes reconstitute, these changes have important implications for the markets because of the significant amount of assets which track the indexes. The most obvious impact of index rebalancing comes from passive funds, whose mandate is to exactly match the performance of their underlying index, and therefore, these funds hold all the same components as the index with the same weightings. However, there are also actively managed funds that are benchmarked to indexes, and these funds are also impacted by index changes. While these funds don't need to exactly match index holdings and weightings, the holdings of these funds typically have a high overlap with the index members. The actively managed funds generate alpha through how they weight component stocks. All that sounds very interesting for index investors, but why should fundamental investors pay attention to major index rebalance events like the Russell Recon? Well, in the near term, Recon results in a meaningful share demand or supply from passive funds within a well-defined time frame that is dictated by the effective date of Recon. Since passive funds must exactly match their underlying index, they are time-sensitive buyers and sellers and may drive a meaningful demand or supply imbalance, which impacts both the trading volume and price of index adds and drops. Actual passive fund repositioning is typically highly organized, with funds structuring their repositioning with large brokers, and the bulk of the flow is executed during the last 10 to 15 minutes of effective day trading. Now that you have a better understanding of what the Russell Recon is, how does it actually work? Well, Recon 2025 occurs after the close on Friday, June 27th, but stocks were reviewed for eligibility and ranked by market capitalizations as of April 30th, and the final list of Russell Recon changes was released on June 6th. While stocks were ranked on total market capitalization for inclusion purposes, index weighting is based on float-adjusted market capitalizations. Since Recon index changes occur via a rules-based process, index arbitrageurs may make predictions about index adds and drops with a fairly high degree of accuracy. For this year's Recon, for new members, eligible companies with market caps greater than $4.6 billion on the April 30th rank day were added to the Russell 1000 index, while those with market capitalizations greater than $119 million were added to the Russell 2000 index. To prevent unnecessary turnover at each Recon, existing index members are subject to a banded cutoff. Existing Russell 2000 index members with April 30th rank day market caps in excess of $7.4 billion were migrated to the Russell 1000 index, while existing Russell 1000 members with market caps less than $2 billion were migrated to the Russell 2000 index. This marks the last annual Recon of the Russell U.S. index family. That's because in 2026, Recon will occur twice a year in both June and November. Aside from the liquidity opportunities which Recon brings, it is natural to question why fundamental investors should care about Recon. Investors need to pay attention because stock fundamentals may be outweighed by Recon-related technical trading ahead of Recon. Over the last 17 Recons, from as early as the end of October prior to the Recon year through the April rank day, Russell 2000 new adds outperformed consistently by 59% on average, while Russell 2000 drops underperformed consistently by 39% on average. For this year's Recon, from the end of October 2024 through the April 30th rank date, the Russell 2000 new adds advanced and outperformed by 53% on average, while the drops underperformed by 39% on average. The period between rank day and Recon provides unique performance trends for impacted stocks, and much of that depends on the level of active fund participation in the trade. While Recon Day is such a meaningful volume day, it is less disruptive to prices of impacted companies owing to the highly organized Recon process. Recon 2025 marks the 22nd year that NASDAQ is handling the Reconstitution via closing cross, and that ensures there's a process around the close to make it a seamless and orderly reconstitution. Here are 3 key benefits of Russell Index inclusion. The first is a diversified shareholder base consisting of both active and passive investors. Passive investors often are dedicated investors. The second is greater institutional interest in the stock, particularly from actively benchmarked funds. On average, Russell 2000 new adds saw their institutional ownership rise to 65% by year-end post-Recon, up from 47% at the third quarter prior to Recon. And the third is sustained improvement in trading liquidity. In the last 3 Recons, new adds traded on average 2 to 3 times their daily trading volumes from the April rank day to Reconstitution Eve, with volumes hitting as high as 20 to 42 times on Reconstitution Day. Thanks so much for joining me today. If you've enjoyed this conversation and learning more about the Russell Reconstitution, and you want to learn more about index rebalancing and strategic opportunities, please contact your Stephens representative and I'd be happy to continue the conversation.